All right, perfect. So the first video of the MMP week. Now we are going to go over the filtering process foundation. And before we dive into that, we need to understand the MMP week here is to put everything together. So again, how do we go over our trading plan? How do you use our trading plan? How do we actually form that trading plan right there? Going over different trading models, different trading strategies, etc. And after this week, we also have the finishing touch, where we go over every last single detail through feedback that we still need to go over, that we still need to work on, that wasn't clear in this mentorship. So for example, if a video wasn't clear, we can go over it again. Now, the filtering process in brackets foundation. What does that mean? The filtering process is the foundation of a trading plan. So the way I view that is you either have a filtering process trading plan or you have a flow trading plan. There's no in between. There's nothing else. You either have a filtering process trading plan or a flow trading plan. Where the next video is where we're going over another foundation, which, like we mentioned, is a flow trading plan. So we have a flow trading plan foundation and a filtering process foundation. Now, the filtering process is where you would analyze multiple pairs. So you're going to analyze multiple pairs and going over multiple instruments to find the highest probability one. A flow trading plan is where you go over one instrument and one pair only, maximum two. It's the absolute maximum, but not more than that. One or two pairs or instruments right there. That is very, very important to understand because that also creates a personality preference, you could argue. And the reason for that is because I can't force you to trade a filtering process. I can't force you to trade a flow trading plan because I simply do not know what you prefer right now. And since we work with different personalities, we have to give different options as well, of course. So my question to you is, which one do you prefer? And I'm going to state the pros and cons right here. And you can see and you can try it out, of course. Whether you know exactly the first straight away which one you want can happen, of course. If you don't know and you're still uncertain, we can try out both plans. So no worries, we can go over it. All right, so the pros for the filtering process. Well, the pros for the filtering process is that it requires less time. So if you're on a tighter schedule, if you, for example, have a job in between and you just have less time to actually focus on the charts, then the filtering process requires less time. But it does require more upfront time. So before you go to your job, for example, it requires a little bit more time. Where during your job or during whatever you're doing, it requires less time. Now, the filtering process is also nice because if we don't have something high probability, so for example, EU, Euro, US dollar is low probability currently, then we can go over to a high probability pair, to a high probability instrument to trade. So we are not stuck with one instrument, one pair. So that could be very nice. Now, there is also, of course, cons to the filtering process, where, for example, it can also be too much for certain people, where it's like, oh, I have a lot to analyze overall, which I do not really like. I just want to focus on one pair. Perfect. That is where the flow trading plan comes in. The flow trading plan is where we analyze one singular pair and one singular instrument. That is very important. So for example, only NASDAQ. Only NASDAQ, that's it. Now, what will that do? The pros are, for example, it requires less upfront work, but it does require a little bit more work during actually trading. So that is something to be aware of, where if you're actually focusing on a job, you're quite busy during the day, I would not really advise a flow trading plan. Again, if you can manage to make that work, of course, then be my guest. If you truly prefer that, then be my guest. And I've said nothing. But I think a filtering process trading plan, if you are quite busy, is the better approach overall. The reason for that is also because if we're using a flow trading plan, we are, like we said, opposite to the filtering process, is the flow trading plan. We are stuck with the conditions that we have. So whether it's high probability, low probability, we are stuck with that. But of course, we can also learn to more so master a single pair or an instrument. For example, ES, a lot of futures traders that only focus on ES have a great intuition, a great mastery of ES because they focus on it so much. So that can also be beneficial. Where the filtering process, you would have that less, where you just understand the overall market a little bit more in a filtering process. So the flow trading plan, pros and cons, filtering process, pros and cons. It's picking your poison because both are going to have cons. So which cons do you want to have right there? Well, for me, I really like a filtering process currently, basically because it fits my time schedule more. So that is why I like the filtering process more right now. And I like the ease of analyzing upfront a little bit more. And then during, it's quite nice that I can just know where I want to execute, etc. So I like that. But I've also traded a flow trading plan before, where I only focus on ES for a while. I've also only focused on NASDAQ for a while. I've also traded only JUR40, DAX you're seeing right there on the right side of the screen. I've only focused on DAX for a long while as well, where I applied a flow trading plan. The flow trading plan allows you to go into lower time frames, where the filtering process trading plan, the PD array you are going to be using for filtering process trading plan is always going to be of the 4 hour and above. And the reason for that is because you are going to be analyzing multiple pairs. Now, let's say you're analyzing 3 pairs. All right. Then, of course, over time, you can also maybe use the 1 hour as your PD array to go into the entry patterns, etc. Now, for your entry patterns, of course, for your filtering process, you're going to be using 5 minutes, 15 minutes, 1 hour, 4 hour, and even daily. For the flow trading plan, you are going to be using any time frame. And that is because you have more focus, you have more time, you have more energy to actually focus on multiple time frames. Where if we were to go into the 1 minute time frame on a filtering process trading plan, we can do that, but that's going to require a lot of our energy, a lot of our focus, which we don't necessarily want to do because all our focus should be focused on actually finding the highest probability pair. And that is where the filtering process is so super strong, because the filtering process allows you to find the highest probability conditions always. And if you can find those, and if you're very good at finding those, then the filtering process could be very good for you. So that is exactly what we focus on in the filtering process as well. Where flow trading plan, of course, is the opposite, but also has its pros. So there's not one better than the other. Please don't think that there's one better than the other. Because I'm trading the filtering process doesn't mean the flow trading plan is better. It's mostly a personal preference and a personality choice. It's whatever your time allows you to do as well. Things like that. So I can't make that choice for you. Hopefully that is very clear. Now, the next thing to understand is the filtering process foundation. So how do we start a filtering process? A filtering process is started by the economic calendar. So what you're seeing on the left side of your screen is Forex Factory. That's the economic calendar right there. Basically the time, the news events, etc. Then what we are seeing here and what we want to look for especially is we want to look for pairs that actually have news supporting the idea of trading this week. So, for example, Australian dollar, we have news on Monday. All right, nice. So we know we can potentially trade Australian dollar on that Monday. But then afterwards, what do we see? Well, we don't have Australian dollar the rest of the week. Then where do we have Euro news? Let's actually look at that. Euro was also on Monday. Then Euro right there is also not present on the rest of the week. So for example, Euro Australian dollar, Euro CHF is ideally what you don't want to analyze, because those pairs is not what we're going to be trading, right? Because we need that news event to actually trade on those days. So if we have no news events during any of those days, let's just simply not analyze them. That again saves us a little bit more focus, saves us a little bit more brain points and energy overall. So we don't need to analyze those. So we can already skip them. Then what can we actually analyze? Well, we can analyze the rest, where JPY, for example, allows us also to, for example, still trade Euro JPY, because we do have JPY news. But if we don't have both of them, so for example, if it was Australian dollar JPY and we don't have Australian dollar and also we don't have JPY news, then we don't trade it. So a pair should have at least one news, where if it's a major, what we went over, ideally one US dollar news event. That is very important. So what do we see for the rest? We have Canadian dollar news, New Zealand dollar, US dollar, of course, GBP news. Perfect. So those pairs are what we can look at. We can look at, for example, still GBP, JPY, because we still have GBP news and JPY news. Then we can also look at US dollar, all the majors for US dollar right there, ideally on Wednesday, from Wednesday, etc. on. So that creates already understanding that on Monday and Tuesday, we ideally don't want to look at any US dollar pair because we don't really have, or we don't have the high impact, not the red folder. So right there, all right, that also creates the understanding that Monday and Tuesday, if we are going to trade, we want to focus on cross pairs. So everything that has either Canadian dollar in the name, JPY in the name, Australian dollar for Monday, euro for Monday, for example, and New Zealand dollar right there. If it doesn't have the dollar in the name again, so that is going over the crosses, which I'm talking about right there, which is not directly tied to the dollar. Of course, indirectly it is, but not directly. It doesn't have the dollar, doesn't have US dollar in the name itself. Now, that is very important to also understand last week that we had, because here we see a lot of news right here. It's very important to understand before we actually analyze the price pairs and before we go over price itself, that what are we actually looking at here? We have US dollar CPI on Tuesday. Then we also have US dollar FOMC on that Wednesday, meaning that because we went over time and we understand time, that the higher time frame time tells us that Monday, Tuesday, and Wednesday right there are already not tradable for the US dollar, which means that for Monday, Tuesday, and Wednesday, your eyes would go to the crosses. And the crosses is exactly what we're going to go over as well. But if the US dollar is not tradable because of news events, because of NFP, because of CPI, because of FOMC, or in general, because there is no news or it's a bank holiday, then your eyes would go to the crosses, to the cross pairs, where the US dollar is not involved. So what do we do right here on this particular week, and how do we now, what is the next step in the filtering process? We've gone over the economic calendar and we understand we can analyze quite a lot of pairs because there is quite a lot of news as well. Now, then what would you do? You would start analyzing multiple pairs. Now, what I am about to do, I am going over certain pairs, which this is my filtering process, and this is the list I created currently. But also know that if this is too much for you right now, you don't need to analyze every single one of them. You can also shorten the list. So how do you go about shortening the list? Well, it's quite important to still have a bit of everything. So we want some of the majors that we're seeing here on the right side of our screen. We want, for example, EU, GU, because if we know that the dollar is moving, then those are also going to move. So if the dollar is clean, is high probability, then ideally we want to trade EU or GU. But what if the dollar isn't clean? Then we don't want to be completely reliable on the majors, on US dollar instruments. So ideally, we want to now go over the crosses as well, and we want to incorporate a few of the cross pairs to not be fully reliant on the dollar. So just making sure, if you want to shorten the overall list of the filtering process pairs, then please feel free to shorten it. But please also keep in mind that we want to have certain pairs that are not related to the dollar, and we also want to have certain pairs that are related to the dollar. And then again, also taking into account your time zone. So what is your time zone? Are you mainly going to trade in Asia? Perfect. Then focus on, again, what we went over in those Asia pairs, those Asia majors, or mainly London. Perfect. Focus on those London majors. That's very important. Now, if we go over all these pairs right here, it's also quite important to know that for your filtering process, ideally, Forex works the best for your filtering process. Indices right there work the best for a flow trading plan. So a little bit less than a filtering process trading plan. The indices still work great for a filtering process overall, but you will notice that you will have more opportunities for Forex. You can still add them to the watch list, but you will have more opportunities for Forex. So if we actually go over multiple pairs right here, then first we start off with the dollar. The dollar is where everything starts. And the first thing we actually do on the dollar is we analyze the monthly first. And the monthly is where we start. Monthly, we are seeing, all right, we might have a monthly VWAP lower right there. This is typically what you'll see me do during forecasts. So during forecasts, especially on Sunday, we start with the filtering process. Because on Sunday is when we start analyzing every single pair. Then analyzing every single pair on Sunday is where the filtering process starts, because that is where you now have the highest probability pairs for the coming week. Then throughout the week, if you follow along with the forecast as well, throughout the week, you will notice that I remove certain pairs because they do not agree anymore with the filtering process. So what I'm going to be doing now is typically what I would do on a Sunday. First things first, on a Sunday, check the monthly really quick. What are we doing? Well, we are potentially creating a monthly fair value gap right there, which we are also seeing that right there, we are above that previous month's low right there, which is also a discount rate, of course. So here on the weekly, we did not close below this low, which is sitting right there. That weekly swing low, which is the previous month's low. All right, it's good to know because we might be respecting that low to then potentially eventually trade into the monthly fair value gap right there. Because again, price is already taking into account that monthly fair value gap that is being created right there. All right, good to know. So if we want to create a bearish weekly value gap, we should not trade back above this, above that low right there of that up candle. Perfect. Which means that if we go into the daily, on the daily right now, we are seeing daily fair value gap, which we could continue lower from overall. What is news saying to us? Wednesday. Wednesday, we could potentially continue lower off of those daily fair value gaps. So if Wednesday stings into those daily fair value gaps, or even Tuesday, later in Tuesday, it already does, then Wednesday is where we can actually look for those trades. All right, so currently, the dollar is really dependent on what the daily fair value gap wants to do. Because if this does not want to hold, and we are respecting that swing low to the left on the weekly, what we saw, then we might actually want to trade higher. On Sunday, if you're using a filtering process trading plan, I do not go into the 4-hour time frame. And the reason I do not go into the 4-hour time frame is because here it's simply not necessary. I found my context on the daily. If once you find your context on the time frame, so going from the monthly to the weekly to the daily, once you find the context, then you don't need to go any lower. So finding that context is the most important thing. Of course, we have bias, narrative, then we have context. Once you find the context, that is when you stop going down in time frames. Because imagine if I went into the 4-hour right now, then on the 4-hour, I would already see this 4-hour value gap right there, which we can continue lower from potentially. But that is not relevant. Why not? Well, of course, news is not supporting the ID, but also this daily value gap is simply there. So please also do not go into the lower time frame to look for fair value gaps inside fair value gaps. You don't need to do that. And the reason for that is because if we have multiple fair value gaps, we have this 4-hour value gap, we have that 4-hour value gap, and we just have one singular daily fair value gap, for example, then just trading off that singular daily fair value gap makes it a lot easier. Because if we trade off of 4-hour value gaps that are, first of all, not part of current order flow anymore, then we are likely going to take a lot of hits when we then go into the 5-minute, which again messes up the whole trading plan in itself right there, which we don't want to do. So once you find the context and you go down time frames, do we have context on the monthly? No, not yet. Do we have context on the weekly? No, not yet. Do we have context on the daily? Yes, stop right there. And then afterwards, once we are moving from context to context on a daily, weekly, or monthly, whatever it is, that is when you can look to incorporate the 4-hour. So this is what you'll see me do a lot of times in the forecast videos as well. So this is now where we understand the dollar. Now, was the dollar super high probability to you right now? I would argue not really. It was not super high probability because we mentioned we can continue lower off of that. And we mentioned we can also continue higher towards the potential monthly fair value gap that we are creating. Well, that is for me, in my mind, that is quite 50-50. I'm not sure how that is for you, but for me, that is quite 50-50. Because the arguments, what did we do? We stacked arguments up. We stacked arguments against each other. The bullish arguments are there. Bearish arguments are also there. So what do? Well, we know that this right now is not the highest probability. And because we already know that the US dollar is not the highest probability right now, we also know that the rest of the US dollar majors that we are seeing in this forecast list are also not the highest probability. Because we're unclear of what the dollar wants to do. So where would your eyes shift right now? If it isn't because of time that the dollar is low probability, and it's because of price that the dollar is low probability, because you can't get to a clear bias on the dollar itself, then what would you do? You would go to the crosses. So right there, you would analyze the crosses itself before you even go over the US dollar. So you would also put the US dollar simply on a waiting list. So waiting, if it clears up again, all right, we might be able to do something. But in the meantime, we focus on the crosses. Now, to go over a full filtering process as well, and to go over how the full steps, as in to go over the indices right there, Forex, metals, and the others right there, I'll fully go over it right now to understand my thought process on it. And then we move on to the crosses. So, again, what do? On this Sunday, we start on, again, it's not Sunday currently, but this is what you will do at the beginning of the week. Then, right here on ES, what are we doing? We start on the monthly. Monthly can just look to continue higher. Potentially have monthly swing high right there. Do we have a narrative? Narrative on the weekly, not yet. We are creating a weekly for Vergap though. Could be interesting. On the daily, we had narrative right there, which also creates the context. Because narrative, where are we going higher from? Context is the target right now as well incorporated. So we know where potentially we want to get involved. Now here as well, because we are of course already saw the dollar, what it wanted to do and potentially wanted to do, then here we can also see that currently, well, we are not trading to the daily Vergap, or we're not even close to it right there. So eventually we could even, but this is where the flow trading plan comes in, if we are now sweeping that previous week high right there, and on a 4 hour, we now get 4 hour Vergaps lower to target that daily Vergap to then continue higher. That could potentially be nice. But again, that requires what? Requires time currently. Unless you are trading a flow trading plan where you are allowed to go into below the 4 hour time frame. But that is something we'll go over tomorrow. So right now, is there anything to do right here? Well, on the 4 hour, we have these 4 hour Vergaps. But again, we have that daily Vergap sitting there as well. So we don't want to trade this 4 hour Vergap right now. We want to wait. Simply, is there anything to do? No, not really. So we wait. Nasdaq right here is as well, same exact thing. We don't really have anything to trade off of right now on the daily. So if we go over it on the monthly, right there, all right, not really anything to trade off of. Weekly, we reached the weekly target actually in the form of that weekly Vergap. So right now, anything to trade off of higher on the weekly? No, we don't have a weekly Vergap right there. Daily, is there anything to trade off of? Well, the recent daily Vergap that we have is sitting right there. All right, well, if we want to target that, again, it's the same story. 4 hour could potentially point towards lower prices, towards that daily Vergap. Then we can look to get involved. But currently, there's just simply nothing to do. So either you would put this on the waiting list and then eventually we can potentially look at it. Now, this is what you would do for every single pair and instrument right there. Again, if that's too much and you don't like doing that consistently, then you can also look to make the watch list overall a little bit shorter. So you don't have to do that for every single pair, for every single instrument, if you do not want to do that. So if we do know, well, the dollar is a little bit lower probability and I do not necessarily want to get involved in the dollar right now. Perfect. Then let's go over the crosses. And this is where you would now want to do the same exact process. Where you look, do we have the economic calendar supporting the idea of trading these crosses? Yes, we can analyze them. We start on the monthly. Stop when you find context, stack up arguments and see which pair is higher probability. And that is the point we are going to focus on right now. So let's look at these pairs right here. So I already did on Sunday, the weekly forecast. I already did my analysis right there, already did my forecast and already came to the conclusion that Currently, there are not a lot of high probability pairs because we are in December, but there are a few high probability pairs that might be interesting. CHF JPY, Euro Canadian dollar, Euro CHF, GBP Canadian dollar, New Zealand dollar JPY. Now, currently, we also said there is no Euro or CHF news anymore for the rest of the week. So on a Monday, for example, when you now update your filtering process list, you now also know, all right, perfect. So I can remove Euro CHF right there. Now I'm currently going to keep it on the list to go over the next step as well. But that is how you would go about it. So right now we have CHF JPY. And if we go over CHF JPY, on the monthly time frame, we are looking at this low potentially right there to target. On the weekly time frame, we have this weekly fair value gap sitting right there. Now that's quite a big retracement, but we do have that weekly fair value gap, which we just simply can't ignore, of course. Now on the daily time frame, we have this daily fair value gap, which Friday already had a sting into it actually. So we're stinging into it again. Now currently, we can still continue lower, but overall, is this super high probability? I would argue, not really. So what would I want to do here? In this case, I do go into the 4 hour. And in the 4 hour right there, I am looking at potentially a new fair value gap. So the overall ID was bearish. So if I want to be bearish, I would want a new fair value gap right there because that creates a new PD rate, that new context to potentially trade off of. I'm not going into the 15-minute right there immediately. Why not? Because if we take 15-minute trades right there, imagine how many hits we are going to take before we actually see the winner happen. So when in doubt, you wait for a new fair value gap right there lower, which on a filtering process trading plan would be a 4 hour fair value gap lower or higher. Ideally, when you're in doubt, wait for the 4 hour to show itself what it wants to do. Minimum 4 hour right there. So right there, we can say, well, okay, we can add this to the short list. So the red right there is where I put it on the short list. So I right click that and I put it on the short list, which is the red mark right there. If I put it on the green one, then I put it on the long list. And those both lists, they create an interest list. So with CHF JPY, I just currently placed it on the interest list right there. So if we now go over Euro Canadian dollar and we take a look at Euro Canadian dollar, well, on the monthly, what are we seeing? Monthly, no fair value gap higher. We can potentially even look to target lower towards even that low potentially right there. So that could be quite nice because this fair value gap right there is clearly not pushing price higher. How can we get there? On the weekly, we also have this weekly fair value gap that we came into last week. Then we came into that weekly fair value gap lower right there. All right, so we could be continuing lower overall off of that, which next target could be something like this fair value gap as well, and the order block beneath it right there. Closer targets. All right, first target is that previous week low as well. So perfect. Once we know that and we go into the daily. On the daily, do we have anything? No, we don't have daily context just yet. So before we create that daily context right there, we can already look at the 4 hour as well to potentially show, all right, what does it want to do right there? So either we get a 4 hour fair value gap lower, or we come into the daily fair value gap right there to then continue lower. So right there, we want to wait. Now, here we wait to see, all right, what does it actually want to do? So this would be on the interest list, but we still would require more time here. So we still want to wait overall. Where if we now go into Euro CHF, so we do add Euro Canadian dollar to the interest list right there. We now go over Euro CHF right there. Then with Euro CHF, we have the monthly, which is coming beneath that low. So we could be sweeping that low even. We could also continue lower. If we want to continue lower, then ideally we want to continue lower off of that weekly fair value gap that is sitting right there. On the daily time frame, are we seeing a continuation lower? Well, we do not have any daily fair value gaps higher just yet. We also do not have context on the daily. This is where we can now go into the 4 hour again. Why? Because we are confirming something off of the weekly. So on the 4 hour, we have 4 hour fair value gaps lower. Now in this case, very simply said, if we get a new 4 hour fair value gap lower right there, I would potentially want to get involved. So currently it's still waiting, but it could be quite interesting based on price alone. Based on time, this is not interesting anymore, like we mentioned, of course, but I'm going to keep it on the list right now just for the sake of explaining this video. Then GBP Canadian dollar right there. What are we seeing? GBP Canadian dollar, we are potentially creating a monthly value gap. We still have 11 days, but we do have bearish price action overall. Monthly, not super clear. Weekly, disrespecting the weekly order block and the weekly fair value gap right there, which is quite interesting. Next thing we could do is target this low potentially. All right, on the daily time frame, do we have something as in context? No. 4 hour, do we have something as in context? Well, we have this 4 hour fair value gap sitting right there. When is this tradable? Canadian dollar CPI tomorrow. Could be quite interesting actually. So we want to take into account still that CPI, of course, on Canadian dollar. It won't blow your account like US dollar CPI, but we still want to take it into account. All right, so right now, if we can get potentially fair value gaps lower and we can potentially even look for an entry right there, could be quite interesting. Then this could be added to the short list as well to now target this low right there. Then here you see New Zealand dollar JPY, and this is on the waiting list. The orange one is the waiting list for me. Again, there's all things you will see me go over through the forecast. So the repetition happens in the forecast right here. So if this doesn't make fully sense, it will when you watch the forecast over and over and over and over again. Because this is exactly the thought process we go over all the time in the forecast. Now, New Zealand dollar JPY was quite interesting if we wanted to continue lower towards that previous month low right there. Which on the weekly, we have this weekly fair value gap sitting right there. And on a daily, right there, we were very close already to the previous month's low. So a retracement here doesn't make a lot of sense. We also have this daily fair value gap sitting right there. So overall, we have a lot going on. So here, if we stack up the arguments again, which was the very mechanical method of getting to that bias overall. Now, I can also understand, again, which leads me back to the point of if you think this, or if you feel like, if you feel like this is too much pairs right now to analyze because you need time to stack up those arguments, that's perfectly fine. Then let's decrease the list. I would advise maybe 6 pairs, maybe 6 instruments right there. Incorporate from the crosses and the majors right there. See how many is the perfect amount for you. You don't need to do all of these, but that's what I do currently because I do it a little bit quicker, stacking up those arguments, bullish versus bearish, where you might still, when you're just starting out, you might still need to take your time a little bit more. That's perfectly fine. Then let's decrease the filtering process list right there. That's very important. So here, for example, stacking up the arguments, well, we could be bearish, but where are we going lower from? I can see this weekly value gap. I can see that daily value gap right there. I can see that we failed to take out that low, which is not a great bearish sign overall. So if we want to continue lower, then I would say, all right, let's wait for a 4-hour value gap that we might be getting there to then look to get involved. So this right here, since we are creating that 4-hour value gap, could now be added from the waiting list to the short list. So in other words, to the actual interest list. So once we move it from the waiting list, or once we actually move it to the waiting list right there is just for you when you see potential interesting pairs, but you have, for example, a very clear bias, you have a very clear narrative potentially, but not a clear context. It's on the waiting list. And then once you get everything clear, you can move it to the actual interest list. So it basically goes from no list to then the either waiting list or interest list right there. And then from the interest list, you pick the one you actually want to trade. So how do we go about that? Because currently, let's say from all these pairs, and I did not analyze the low probability ones right there. So I only analyzed the ones that I already got to, that already went through the filtering process. Because right there, these red ones are the highest probability right now for the crosses. Perfect. That is what I determined. Then if we go to that list, the short list right there, they are all coincidentally right now looking for shorts, so not longs. But if you had a long list as well, then it would just be one big interest list. So here on the short list, what are we seeing? Well, here they are not in the right order, right? Because now we need to understand, all right, what actually is the interest list? So we first have the filtering process, which the filtering process is finding the highest probability pairs. You move them to the interest list. And from the interest list, you only pick one pair that you are going to trade for the day. So just as a general rule of thumb, what I like to use here for the short list is the higher the pair, the higher probability it is for me. So if Euro Canadian dollar right there is the first one, that is the highest probability pair that I'm looking at. Which also comes with the understanding then that when I wake up again and I look for that day to trade, then the first thing I want to do is I want to analyze the first pair, which is Euro Canadian dollar right there. Once I go over Euro Canadian dollar and it's still in the exact same state as I analyzed it before I woke up, before I wanted to trade that session, for example, then the next thing I want to understand is that I need to stop looking at the other pair. So I just want to trade that pair right there. So again, to give the conclusion right there, the way I schedule my day is scheduled with, before I go to bed, I analyze my filtering process. So I analyze the overall interest list right here and I see which one is the highest probability. So let's actually do that right now. Euro Canadian dollar, we talked about that daily Verwijt gap potentially going lower, but also the 4-hour going lower potentially right there. All right, high probability because I do think this is definitely heading lower. So in that sense, I do think this is high probability right there overall. But if we take a look at Euro CHF right there, then we already have rejection right there of the weekly Verwijt gap as well. And we have potential 4-hour price action lower already. So overall, I like this a little bit more, and a little bit more just purely based on price, of course, not on the time. A little bit more because right there, Euro Canadian dollar, it's 4-hour or the daily. Euro CHF, it's only the 4-hour. So I only have one option to do that right there, which is just wait for the 4-hour to show me what it wants to do. GBP Canadian dollar is, if we take a look right here, is we have the daily, which is currently expanding. We can still look to trade the 4-hour. So here, I would still place this above Euro Canadian dollar as well, because GBP Canadian dollar is where we right now have also only the 4-hour to show us what it actually wants to do. Although if we compare Euro CHF, GBP Canadian dollar, then we see that GBP Canadian dollar, and let me actually look right here, that Euro CHF is sweeping this low, GBP Canadian dollar is inside a weekly fair value gap sitting right there. So GBP Canadian dollar and Euro CHF both have some kind of resistance right there, which they are encountering on. Euro CHF already encountered that resistance first though. So Euro CHF, I would argue that right there it has less resistance to actually continue lower overall. Where GBP Canadian dollar right there still has somewhat of an order block right there to first overcome. But both high probability, that is again, me being very picky, paying attention to a lot of details to see, all right, which one is actually the higher probability, which one do I actually want to trade. So that is when we get very picky overall, but still both high probability. Euro Canadian dollar is what we mentioned, right? And then CHF JPY, let's see. We have the weekly Verwijt gap right there. And on the daily as well, this daily Verwijt gap that we already came into. So I can already tell right here, the bias overall could be quite clear, but I'm not too sure on it. So here, this would be low on the interest list. And the same goes for New Zealand dollar JPY, where we have the daily Verwijt gap and the weekly Verwijt gap right there. Which I would argue, right there, we have quite a few choices. The 4-hour, the weekly, the daily. So what do we actually want to do right there? So this would also be low on my interest list. A little bit higher than CHF JPY, because New Zealand dollar JPY already has a 4-hour Verwijt gap lower right there. So that is how you would go about finding the highest probability pairs, which again, over time becomes a little bit easier as well. So in the beginning, if that's quite difficult, then perfect. Let's first analyze just a few pairs, a few instruments overall. Now, this is also where we now created an interest list, Euro CHF being the highest probability. This is what I do before I go to bed, before the next day. before the next session I want to trade. That's the most important part. That is what I meant with the filtering process. It takes a little bit more upfront work. And when you have that upfront work right there, then the only thing I need to do right now is I need to wake up for my session. And once I have woken up and I'm ready, I'm sitting behind my charts and I fully reopen my charts right now. Then the only thing I have to do is go over the exact same list. And I start with the highest probability pair. So I start with Euro CHF right there. And when I start with Euro CHF, if I see it's still in the same conditions and it's still that high probability condition, then I stop and I don't analyze anything. And I wait for an entry on Euro CHF. But if I see that I don't have anything to deal with on that pair, then I'm allowed to move on to the next pair. Where here GBP Canadian dollar, for example, in this moment in time right there, if we compare these two, then here GBP Canadian dollar, you have a 4-hour VWAP gap to continue lower from. Euro CHF at the same exact time didn't have anything to continue lower from. So what do we do? Or at least not a clear GBP Canadian dollar was a little bit clearer. So right there, you want to look for, all right, we are going to trade GBP Canadian dollar and we wait for the 4-hour VWAP gap. We set the alert. We wait for our entry pattern right there with a 5-minute ST plus re or a 15-minute ST, whichever one you have chosen to wait for. So that is important to understand. And the reason that is important to understand, because right there, you would now also GBP Canadian dollar, high probability. All right, you don't go any further. So this is a checklist. Euro CHF, is it checked off? All right, don't move any further. If it's not meeting those conditions, you can move further. Stop at the pair that is still in the same conditions as when you analyzed it the day before, as when you actually did your forecast. So the reason why we do that is because the filtering process sometimes is misunderstood, where I am not looking to trade GBP Canadian dollar, Euro Canadian dollar, New Zealand dollar JPY, CHF JPY, Euro CHF, all on a single day. No, I trade one pair ideally. I trade one pair right there. Unless you have more experience again, you can look to potentially trade multiple pairs, but that is after maybe a year. After maybe a year, you can look to do that. First, you start with the first pair, see it's a high probability. Yes, trade that pair and you wait. You simply wait. You do not move on. This also is there to prevent psychology errors from happening. So to make the environment really easy again. Because if we do again go into all these pairs, then if the first one is not delivering or we are waiting, we will flick through these pairs right there and we will again force an ID, which we don't want to have. We want to have that fresh mind going into our pair, going into our trading day. So that is how you would go about it. Now, of course, in this instance, we did not have Euro CHF right there for the next days. So that means that this one, click it, boom, removed from the interest list. So now the interest list is GBP Canadian dollar at the top. So tomorrow is, or will this be interesting to trade tomorrow right there? Yes, that could be quite interesting to trade tomorrow because we have Canadian dollar CPI right there, which could be quite interesting. So that is exactly the interest list and how you want to go about it. So to go over the steps we took right there is first you start off with the economic calendar. Then you analyze multiple pairs. Then start on the monthly. Stop when you find context. That's important. Stack up arguments and see which pair is higher probability. The higher probability pairs is the ones you add to the interest list. The interest list is all the highest probability pairs. When starting your day, analyze the first pair. And when you analyze the first pair, again, you see if it's high probability. If not, you move on. And then after that, so this is typically what we've gone over right now is our Sunday. After that, we go into Monday. So Monday, we do the same thing. We analyze them again. What is happening? Which one is right now higher probability to trade? Perfect. It's still the same. We leave it like that. Is there one pair who's doing the complete opposite? So for example, GBP Canadian dollar is now doing something like this. Boom, a move higher. What do? You simply remove it off of the interest list right there. Now, all the pairs that you want to be trading are ideally selected on Sunday. So when you go into your trading week, you have already selected the pairs that you potentially want to trade. Of course, you don't know for certain which one you're going to trade, but you potentially want to trade them. This is as well important to not get that impulsive and those thoughts right there, where I now go into a different list, for example, back into the crosses list, and I now go into Australian dollar, New Zealand dollar, and I think, could still be quite nice right there. And I get those impulsive thoughts right there. So that is, again, to prevent those impulsive thoughts throughout the week, because throughout the week, of course, we are more emotional. So we might see a pair, and because we didn't take a trade yet, we might start to force an ID right now. So all the pairs you are going to trade should be selected on the week before that. So on your Sunday. And then once Sunday comes, you have your interest list. And then throughout the week, you are adjusting your interest list. Which one is the highest probability still? Which one is the lowest probability? Can I remove certain pairs? That is what you want to do. But you never want to add in another pair. That is very important. So this is consistently what you're doing. Then as well, a little detail. For example, for the shorts here, let's say we all of a sudden get unusual context, where right now we get unusual context and we get a move higher on GBP Canadian dollar. Then you can still add this to your long list overall right there. And once you add it to the long list right there, you have two lists where you have long and short. Overall, you still need to understand the long and short, they are combined as one interest list. So I just have it for convenience reasons right there. It's a little bit easier to understand if I'm looking at shorts or longs right there. But overall, it's still one interest list right there. So that is also very important to understand, that you treat it as one big interest list as well. This is the filtering process foundation. This is the foundation of a trading plan. As in, you're either doing this or you are looking at only one pair or one instrument to actually trade. So this is what you want to be doing for your filtering process. Now, I would highly advise, and from now on, you are allowed, in my opinion, to take a look at the forecast with the reason behind it again. And of course, you also need to finish the videos before you can actually access the forecast. I understand that. But if you have access to the forecast already, then right there, you can now watch the forecasts, because the forecasts are very nice to actually reinforce this idea of the interest list and to see how I would go about it, etc., to understand the mechanics of that filtering process. These are the things you need to understand for the filtering process right now, and through the forecast, we reinforce those ideas consistently. All right, then the next video is where we are going to go over the opposite, a flow trading plan foundation. All right, perfect. Thank you.